Welcome to the Full FX Unfiltered. My name is Colin Lambert. I'm publisher of the Full FX, and today I'm delighted to be joined by Jamie Walton, who is co-founder of Siren FX. Jamie, lovely to see you again.
You too.
Obviously, every month we publish details of what happened at the month-end fix, and it's very popular with our readers. But I thought what I'd like to do with you is maybe today get into some of the wider context around, first of all, what's happening around the fix,
Yes.
but also the broader execution quality issues that perhaps we're only just starting to focus on. So maybe what we could do is start with your reflections on 2023 away from the month end, which we all know what happens there.
Yes, no, it was an interesting year. So if we look at comparing Siren against the fix, for example, then one of the standard measures we look at is the comparative savings you could make if you traded at Siren versus the fix, which we expect normally to happen, as you've shown, because it's understandable, it's market impact. The fix has a huge amount of volume, large market impact, and of course the Siren FX benchmark doesn't suffer from that. So what it means is we can actually measure both market impact and market volatility. They're both the two twin engines, if you like, that drive the differences. So we saw volatility in 2023 drop down relative to 22. Obviously, we had Ukraine and so on. So that was a highly volatile year, but not by much. And so I think if we're still seeing month end, average savings in G10 of around $600 a million. But if you go away from month end, which is your question, you still see savings of close to 300, about roughly half. Dollars per million. So it's not like it's only the month end that matters. Every day we see this effects, this volume going through, and this one directional flow, as we have discussed, which causes that market impact.
And it is quite funny to me because I guess it shows how bad things have been in the past that we nearly shrug off $300 per million. But I think if I showed someone an execution slippage of $300 per million, they'd probably go nuts.
Well, yeah, and if they're probably screaming at their broker over whether they're paying $10 or $12 a million in fees, and then they don't care about the $300 millions because they chose a different benchmark. I mean, it's bizarre to me.
Do you think? I mean, obviously, part of the we noted there that 2023 in terms of month ends. So if we assume half, then it will be the same from 2022.
Yes.
That the savings and market impact was slightly lower. Is that partly an element of people looking at how they execute their fixing flows more?
I think there is. We are seeing lots of interest, obviously, in alternative benchmarks like Siren, so that's definitely happening. I'm seeing, I run studies on behalf of clients, and one thing I see is more people trading away from 4 o'clock as well. So compared to a few years ago where it was like 95% of the time it was 4 o'clock, now it's maybe 90% of the time. Okay. And you do see people trading at 3 o'clock, 2 o'clock, 1 o'clock as well.
And I guess sometimes the day before.
Yes, and actually that is something, talking of patterns, we do see the day before the savings have increased. Right. So actually the interesting things aren't just the month end, it's the day before. You get other quirky effects like in dollar yen, numbers ending in 5, you may know this. So if a day ends in 5, you tend to see bigger impact, and that's because lots of Japanese corporates. That's
the thing that only a data geek would really know.
That's the kind of stuff I love. And then you think, well, what happens if the day ending in 5 is a weekend? Oh, well, it's the closest day to it, but it's not. It's either before or after, depending on which day. So yes, you can get into the weeds, which I have done. I've got 6 years worth of data.
But joking apart, but that is actually the important element of today's world. Everyone's talking data, everyone's talking analytics, but you've actually got to be able to produce meaningful outcomes and, I guess, actionable decisions, to use a horrible cliche, from the data.
I think understanding why as well. People love to look at data and come up with a theory, but normally there's a reason why certain things happen the way they do. So being able to justify it based on the market.
Yeah. You mentioned volatility there, and obviously being slightly lower. It's interesting because the JP Morgan 2024 E-Trade and Edit came out earlier this week from when we're recording, and volatility was seen as the biggest challenge by traders.
Yes.
Can you give us a sense of how different levels of volatility are impacting execution quality around
Yes, well, there's volatility. I think the other element I sense is market impact, because people think that, say, trading at fixing, trading at 4 o'clock, that's the best liquidity. I hear banks telling their clients that's when the best liquidity is. But no, that's not true. That's when a lot of volume's going through. But this is one-sided volume.
Yeah.
So that's a challenge for you in terms of, so volatility isn't all about, random noise. It's about when it's against you, that's a bad thing.
Yeah.
So if you're trading the other side of the market, I mean, I think you have your faith.
I mean, I apologise to you and I apologise to our viewers, but the first lesson I learned in foreign exchange was the definition of liquidity is you can do as much as you like when you're wrong. Exactly. There's a lesson, children, from Uncle Colin. So one thing I would say is, I mean, because it is one way, there's a lot of people do think, it strikes me quite a bit actually, that on the day before the fix we'll get strategists going like, oh, the fix inflows will be dollar buying.
Yeah.
And then also it's dollar selling.
Yes.
And I'm thinking, well, okay, I guess they're looking at a narrow subset. I mean, how easy is it? I mean, could we predict fixes?
You can to some extent. I mean, there's no guaranteed prediction, but for example, I've been doing some work around, well, a couple of things, but one thing is looking at equity markets, because a lot of flow is driven by... That's
your one swear word for the interview?
Sorry. It's driven by equity funds rebalancing their FX flow, but they do it, and the thing is, that's something that we can qualify, so you do see that, particularly around some of the MSCI. Can I use that one? Is that a swear word?
Yeah, that's fine. Yeah, that's fine.
MSCI.
It's not the E word, it's fine.
So the rebalancing for that, which I think is April and November, those are big months and fairly predictable. So we have come up with a predictive model which can predict the direction the day before based on the previous day's close. Yeah. So we can predict. And then further, trying to predict where the fix will be, we can do that on a much shorter time scale, like in the 20-minute window before 4 o'clock when we're calculating Siren, we can actually predict what the likely 4 p.m. fix will be at 4:02:30, usually 5-10 minutes before it's published. And that's based on, again, our historical data. We've got lots of statistical evidence about how much variance there is between those two benchmarks. And you tend to see that the biggest variance is when there's a bigger move, which is something to do with how people are trading on one side, so it causes there to be a bias.
And I guess it would also, the amount of the imbalance would play a role in that as well. Because they're going to be pre-hedging more aggressively if there's a much larger meant to be executed.
And actually, they're talking about patterns. Another pattern I've noticed is that pre-hedging is much more dominated in G10 than in emerging markets. You don't actually tend to see it so much in emerging markets. So even sometimes the Scandies, you tend to see that all the action's focused in the 5-minute window, quite predictably. And so you get not much happening, big spike, 5-minute window, big retracement in the end. And that's, again, something that's somewhat predictable. And we have the stats now to back that up, which is another thing we can offer through Siren.
So I mean, effectively, it becomes in a function of liquidity.
Exactly.
Yeah. So they look at, okay, we think we can get this done in a 5-minute window.
Yes.
Interesting. I mean, is your sense, I mean, certainly it's my sense, I always like verification on these things, but do you sense that people are paying more attention to their execution quality now than maybe they were a couple of years ago? Yeah,
I think there's been more focus on it. I think everyone's always looking for the edge they can get. So, yes.
And I guess the availability of data has actually meant that it's easier to quantify if they're achieving that edge.
Completely. And I think a degree of sophistication as well by the end users. So another angle we've been focusing on is can we actually quantify not just the benchmark, but actually your algo? So you've executed an algo. Did you do a good job? Yeah. So working with TCA agents, or even banks, how can they demonstrate that their own inbuilt algo did a good job? Well, you can compare it with TWAP, fine, the standard, but anyone can beat TWAP because, as you and I know, TWAP is the worst algo. Can I just speak to camera? That you can use. But so anyone can beat TWAP because all you do is front load your execution. That's the secret, guys. So there are better algos out there, and most people know that. Most people will use some form of, say, implementation shortfall algos, where you're, as I say, front-loading your execution. But there's no standardized benchmark out there for that. There's no sort of universally agreed. Whereas TWAP, you just calculate an average. How do you work this out? Because you have to factor in market impact, and then that becomes a bit more nuanced. But of course, that's what Siren does. The whole point of Siren is we are using market impact to work out how to measure our benchmark. Our goal is exactly what you said. We want our benchmark to represent how you would pre-hedge the fixing or how you would trade out of your algo. So because we have that built in naturally, unlike, say, other benchmarks, WMR, which has more of a TWAP style. It's not completely TWAP, but it's essentially a TWAP. We can actually now produce our model, if you like, our algo benchmark. So if someone wants to see how well their algo is performing, we will give them a bespoke Siren, technically an inverse Siren benchmark, which says, you tell us your start time, you tell us your end time, and we will tell you what we think a good fill would be. And now that's a much better metric than using TWAP to know whether you got a good fill or not.
Yeah. Well, that means people have got to work harder to prove that they've done a better job.
Yeah, exactly.
So so then you mentioned a couple of times there, like the methodology or what Siren can do this stuff. So where are the differences in the methodology that you're providing that actually allows you to deliver this sort of analysis?
Yeah, there's two main differences. So the first one, maybe the simpler one, is the fact that we're using independent data to drive it. So we're not using exchange data, we're not using a bank data, we're using this aggregated source of ECNs. So that's the first one. But then when it comes to methodology for the fixing, the 4 p.m. or any other time, we're using a 20-minute window. So that's already going to reduce market impact because you're trading over a longer window. But we also do the weighting. So we use something called optimal execution, which means you're sort of increasing your weights as you get towards the benchmark. So that the inverse of that would be, if you want to execute, you start by trading more initially, and then you slow down. So you get this trade trajectory. So you trade more initially because you don't want to get too much exposure to market movements.
Yeah, you have the surprise factor, I guess, don't you?
Exactly.
For a period of time.
But if you trade too much, of course, you're causing market impact. So there's a nice mathematical optimization you can do of how do I minimize market impact whilst also minimizing exposure to volatility.
Yeah.
And that's this optimal execution technique, this model that we're using to calculate Siren.
And it's fascinating to me that people are starting to look at this stuff beyond just the fix, because best execution is a fluid concept, I think, at best. I mean, some people think ring 3 LPs and hit the highest bid is best execution, and I guess that's fine. But my sense is we do need to think in a more, you use the word sophistication, which I like. We do need to think about it in a more sophisticated way if we're to properly judge what people are doing.
If I want to be slightly controversial, I mean, most people are failing to do best execution when it comes to benchmarks. Because what they're doing is they're using one benchmark. And maybe they're getting 3 brokers to determine whether they're paying $8, $10 or $12 a million. But it's still the same benchmark. So you're not really comparing what would happen if I traded at an alternative benchmark. So the only way you can really do that is to see what it would be if you traded it.
But then I guess in fairness to, there are a lot of less sophisticated players who are not really dedicated FX traders who are just doing an admin trade, maybe not that large. I guess for them, that basic, yes, you've done a good job, works. But the sophistication curve, particularly on the buy side, is going up, isn't it?
Exactly, and we are seeing that. And we're seeing that there are more questions being asked by people, particularly when they're educated or when we go out and speak to them and they suddenly realise, oh, you mean FX is not agency? And suddenly they realise that there's something that they've been missing, quite fundamental in their execution. And so, yes, there is an opportunity when people are aware. And when they are aware, they normally say, yes, we need to do something about that. So it is about that process of education. And there's demand. There is demand out there. And it's just about trying to push people, to make changes, because there's always inertia.
Yes, there is to a degree, but I guess if the awareness is growing, then the education hopefully
follows. We do find that we are pushing more and more on an easily open door, which is good. Whereas before, the door was firmly shut. Now people are actually want to listen, are reaching out to us, and want to understand how they can do better. Yeah. Well, as you and our viewers are well aware, probably, I'm quite passionate about this whole execution business. So, Jamie, thanks very much for giving us your time today. Thank you. Good luck with the push to educate and improve execution outcomes, or our understanding of them at least. And thanks everyone for watching, and we'll be back with the new interview soon. Thanks a lot.